Hey everyone, it's Nick with Us versus Herd. Everyone is getting bullish again. We obviously had today a crazy up day in the market, and whenever things like this happen, the bulls come out, and I don't want to damper the party or anything like that, but I want to be realistic. Buying stocks right now is very, I would say it's dangerous. I mean, we're at the forefront right now of this earnings season. And I say this earnings season and the next one are going to be some of the most important earnings seasons for 5 years, okay? Because, I mean, right now, we obviously had a bad inflation report. Everyone is expecting growth to slow. However, everyone's getting bullish because we're at a point, like, look at the NASDAQ here, kind of starting to bottom out. You even have Jim Cramer saying we're going to bottom out here. And sure, if you zoom in here, yeah, I mean, maybe. I mean, I'm not saying there is. I mean, it's potential. Let me know what you think. But I mean, it's potential. I mean, we had a low here, a little bit of a higher low here, a little bit of a higher low here. However, I mean, we're still way below the 200-day moving average. I mean, to get like, oh yeah, well, we're gonna blast off to infinity. Obviously, you want to buy a low, sell high, but also in this market, it's extremely dangerous. I'm gonna go over why here in just a second. But I just want to look at this chart. I mean, today the NASDAQ went from basically 890, closed at 307 right in here. I mean, this was a 400-day mover, 400 point mover on the Nasdaq, up over 3%. And this is before earnings came out for Netflix. I mean, yesterday we had IBM earnings, which I'll cover, but I want to go over what's going on here, right? And one of the things that you'll notice is before earnings, Apple hasn't reported earnings yet. Before earnings, companies are starting to leak news like, hey, we're going to slow down. This is actually what tanked the market yesterday. Today, market's up on some like Ukraine, Russia news heading into earnings, okay? Right, yesterday, we were actually having a pretty good day in the market, and then it just tanked. And Apple came out saying yesterday, hey, we're going to slow down hiring. We're going to, just take it easy. We're expecting growth to slow down. Whenever there's a slowdown, everyone starts to panic. And everyone's like, obviously Apple is one of the biggest stocks right now, or is the biggest stock in the stock market. And it tanked everybody. Everybody went down. Everyone got scared, and we sold off hard. Big reversal today. And then we went up, a bunch today. So, whenever companies are doing that, we're expecting that, things are gonna be a little rough. IBM earnings. I mean, IBM actually had good earnings. They beat top and bottom. However, what happened yesterday? These earnings came out yesterday or last night after market close. IBM is worried about inflation is going to eat at their business. And what happened to IBM's chart today? IBM had their worst day in a long time. IBM, it was down 5%, down $7. IBM actually hasn't been doing that bad this year due to, they have, their cloud business is doing numbers. I'm not going to go into detail on their earnings, but they're doing numbers. But they came down and they went way below. 128 below the 200-day moving average. This is one of the most bullish stocks out there. It's been holding above the 200-day moving average, and today it got smoked. It was 140 a couple days ago, down to 130 day, hit as low as 128. And, I don't know if it's going to bounce here or not, but right now buying this looked like a safe stock. IBM, cloud computing is going crazy. Things are going nuts. And it's actually been one of the only stocks to be able to hold. But they sold off a ton. This is why this thing is dangerous. You might actually know what's going on here. And I think everyone right now is afraid of the slowdown. And right now I'm just I'm observing. I'm saying, hey, what's happening here? Are things going to get better? Are things going to get worse? And right now, you could actually track some of these tech layoffs. There's a website called layoffs.fyi where you can, look at, by a percentage basis. You have OpenSea here laid off 20% of their workforce. You have, TikTok laid off a bunch of people. Vimeo's laying off 6%. These are just not like little companies. These are some bigger companies that are here. You can kind of go through this. But right now, I think that with the growth slowdown and everyone kind of being scared that sometimes, everyone's prepping us for the worst, like Netflix prepped us for the worst, right? They said Netflix only loses 970,000 subscribers in the second quarter after warning of a loss of 2 million. And they were afraid because of the whole Russia thing and all that they were going to lose a lot of subscribers. They pulled out of Russia, and obviously with inflation, people are cutting back on spending. And one thing is they don't have great content. But I think what did save Netflix was probably Stranger Things dropping. Because that thing's been, people were watching that. They've actually had some pretty decent content coming out, but Netflix even said they were slowing down. They're anticipating they closed down their animation business. I mean, it was crazy. And I mean, let's go into their chart here. I mean, this thing is big trouble, right? I mean, today had a 5% day, and after hours here right now, I mean, this thing is popping $10-$20. I mean, right now at the time of the video, it's 216, hit 225. I don't know if like tomorrow we're gonna come in here and they're just gonna sell this stock. I mean, this thing has been, a few months ago 700, and this thing has been tanking all 2022. I mean, any bounce. I mean, after earnings here, there was a bounce up to 473, got clobbered, came down to here, was crossing over the 50-day moving average. I will say, NASDAQ over the 50-day moving average, I don't hate it. Netflix over the 50-day moving average, I mean, kind of like that. And I guess you could say, like, in terms of like risk reward, where would you rather buy? Where it's kind of leveling out here, like we saw in the NASDAQ chart, or up, keep buying the highs. Right now, like the risk to reward, like if everything goes bad, I mean, like Ackman, I mean, he got obliterated in this. I mean, he just cut the loss. I mean, he bought this dip here, and it just kept dipping. So you don't know, like even like experienced people running huge hedge funds, huge capital, managing other people's money, they don't know any more than you and I sometimes. They're just taking a stab at it and hoping for the best. And I would say, like down here, when you got Netflix in the 200, 150 range, you're kind of thinking to yourself, well, what's the worst that could happen? Go to 125, go to 130, maybe I'll take a shot. And also, as they're prepping investors, bad news becomes good news if you way overcast it, right? So, hey, we're thinking 2 million subscribers are going to be gone. Oh, but you know what? Only 970,000 are gone. It's almost a million, but who's counting? If this were to happen, like if they lost 970,000 subscribers when it was $700 a share, this thing would have been cut in half overnight. They would have had to halt the stock a million times if that were to happen. If that were to happen, I mean, it would have been a nightmare if that were to happen. But this time around, they said, hey, we're going to warn you up front that this could happen, and it's going to be 2 million. And if you want to invest, go ahead. But we're going to miss on subscribers. But hey, because we overestimated how many we're going to lose, it's actually way better. We only lost 1 million, not 2 million. But this is the game that these companies are playing. This is the game that Apple's playing right now. It's like, hey, we're going to slow things down. So when our numbers come out, actually, they're going to be probably pretty good. And we're going to slow things down, and maybe we'll go up. The stock will go up. And that's what happened to Netflix. So just be mindful that if you're investing right now, these corporations, they're playing a game with the stock splits. They're playing a game with the news they're pushing out. When you're investing, like maybe they're going to use this to have more news come out after this that brings the stock lower. We don't know. But right now, companies are trying to save face. The PR firms are working 100%. They are planning this news meticulously on when to drop it, why to drop it, how many, what the numbers are, so that way their stock can survive through 2022. So let me know in the comments. As always, stay safe, stay green. It's us versus herd.